So how do you really prove the infinite banking concept to really make it work? In this video, I'm going to address just that, as how can you actually make it work for real, in real life? Okay, so we hear about the infinite banking concept all the time. There are lots of different viewpoints on social media, YouTube even. You got people debating this topic all the time. Well, can we approach this like a scientist? Can we approach this from a rational place to see, does this really work? And can we use real life examples, not just theory, but real life examples of people who made it work in their lives? That's what I'm going to share with you in my video today, is how have I used it, and also how have other people used it to make it actually work? And what are other ways you could be using that may not work for your advantage? All right, so let's just start. How does this infinite banking concept work? How do we really prove that it does work? Now remember, I used to be a financial advisor back in the day, right? I did that for 4 years. I sold people stuff, basically sold them crap. I sold them mutual funds and everything else, right? Like every other financial advisor. I was a salesman in a suit, trying to pose as someone who gives you financial advice. Now after 4 years, I realized pretty quickly that financial advice wasn't working. It didn't work for my own father, who had worked his entire life, saved in his 401ks for years and years, even paid off all of his debt, including his own home mortgage, and yet he couldn't really retire financially free, even into his 60s. He had to wait till his 70s and just hope that he doesn't run out of money before he dies. That's when I realized being a financial advisor doesn't work. So I started looking for other answers. I started getting into the real estate investing world, and that's when I discovered about this infinite banking concept. Nelson Nash, shout out to the Nelson Nash Institute. Great people that have started this with Nelson Nash, who's like kind of like the grandfather of terming infinite banking concept, right? And when he did that, he wrote a book called Becoming Your Own Banker, right? Great book, good recommended read, good concepts. Some of them are a little bit outdated, but there's still really good concepts you can use in there. So I read that book. This is back in 2006. I read the book. I drank the Kool-Aid. I eventually went to an insurance guy. Even though I was an insurance agent myself, I went to an insurance guy and did it. I went and bought a policy. Now I remember thinking, wow, this is kind of expensive, because they have these upfront, front-loaded fees. It's more expensive in those first years and then cheaper later on. It's kind of the opposite of term life insurance, normal death insurance, where it starts out cheap and then it gets more expensive as you get older. Whole life kind of does the opposite. And so I noticed it was really expensive up front, but of course I realized, okay, well, down the road, eventually I'll have this money that I can go buy cars and houses with and stuff, and I can be my own banker and pay myself back instead. And so I bought into that, right? I started drinking the Kool-Aid. Now, 2 years later, here's what happened, guys, is that the recession hit. Global financial crisis got me to a point where I was a millionaire and turned into an upside down millionaire, meaning I was over $1 million in debt. I was sinking fast, could not afford to keep paying my premiums. And because there was no cash in it to keep it going, I lost the policy. I had paid 25 grand into that policy, only to realize later on that I couldn't keep it. And so as a result, I lost all that money. It was like the most expensive term insurance that I had to keep for just like over 2 years. Well, a few months later, I'm researching about it a little bit, talking with a friend, and I find out that the insurance agent that sold it to me lied to me. Because see, I asked him, I said, is there a way I can make this cheaper? Can I reduce the cost? And he said, no, this is just the way it is. Well, I found out that he could have been more flexible. He could have actually allowed it to where I had cash in there from day one. Day one, I could have had the majority of my cash I paid into it from day one. But he didn't show that to me. He showed me the traditional base whole life plan. Yes, he was talking about infinite banking and everything, but I'd have to wait 5 or 10 years to finally use it. Not could I actually use it within the first year. And so I got mad. I approached him. I actually sat down in his office. We were in the same office together at that point. Sat down in his office and I said, listen, I can prove by the facts here, I can prove that this infinite banking could have been done better. And so I showed him apples to apples. He wanted me to show the same highest death benefit that he had. I did that as well and showed that. And not only did I have cash from early on, day one, but most everybody would have kept their policies. They wouldn't have lost them, especially during the recession. And he told me, he says, Chris, the reason I did it that way is because I could not afford to cut my commissions. And I said, that is what pisses me off. I'm never sending you a referral again. Never did. By the way, this guy now works for a bank. So if you ever want to see where people go when they fail in life, they go work for a bank. Just kidding for all you bankers out there. I'm just kidding. So, but in truth, he did. I mean, he was doing that. I did not send him any more referrals. I was so mad that he had just thought about his own family versus mine, right? Because you're supposed to think about your clients first, right? Well, unfortunately, in the infinite banking space, that's not always the case. So when you try to see these other videos and stuff on YouTube, you'll realize the debate's happening because not all infinite banking policies are made equal. There are varying amounts of fees and designs that people do, and so it becomes confusing, convoluted. Even Dave Ramsey can't figure it out. Now, of course, he can't figure a lot of things out financially, but it's true. Like, he can't even figure it out, right? And so they poo-poo all over it because they're actually right. The traditional life insurance plan, when it deals with infinite banking, does suck. Don't do it that way. There is a better way to do it where you can lower the cost as low as you can go, allowing better returns. That's how the infinite banking concept can actually work better. Now, there's some other common myths and things like that. They tell you to like go buy cars and houses and stuff like that with it. I was always told, oh yeah, if you go and borrow the money from your policy, you borrow the money out of your own cash, you go and you use it to go buy a car, and then you just pay yourself back. And I'm thinking, oh, I pay myself back interest, kind of like a 401k loan. It's not, guys. It was a bold-faced lie. Because the truth is, yes, I do borrow money, but I don't borrow it from my own cash. My cash is the collateral. The insurance gives me the money, and they charge me interest. I still pay interest to them like they're the bank. Now, yes, my money's all in there growing and compounding tax-free interest. That's true. So they're kind of like doing this little maneuvering of words that really aren't true, but there's like half-truths. So they can kind of backpedal and say, well, what I meant to say is blank, right? You all know you have that boyfriend or girlfriend that's done that in the past, right? Like, well, this is what I meant to say. Yeah, but you actually said this, right? So that's what they're doing. So yes, so if I have $100,000 in there and I borrow $50,000 to buy a car, I don't pull the $50,000 out of my cash, even though I could. Instead, the full $100,000 is in there earning tax-free interest, but I'm borrowing $50,000 from the insurance company. Well, if that insurance company is charging me, say, 6.5% for that loan, but I could go to the bank and get the same rate or even cheaper, well, why would I use them? Now, you might argue, say, well, of course, I don't have to make a monthly payment to them. That's correct. You don't. But they do charge you interest. And if you don't make payments, you're not paying yourself, quote unquote, as they say, which is paying down the line of credit, then yes, the interest accumulates against you. And then that's compounding, racing the money you're also earning on this side, right? So now they're compounding against each other. So instead, I actually love using the bank money. I found out that that wasn't the case. I'd rather use cheap bank money than going and borrowing from my policy for things that I could also get bank money for. Now, if I put a down payment on a rental property, then yes, I can borrow from my policy because the banks won't lend me money for a down payment. They'll lend me maybe for the 80 or 75% of the mortgage, but I have to come up with my own money for that 20 or 25% down payment. So I'll borrow from the policy to then do that. That makes sense, right? But never for 1 second believe that you're paying yourself back. You are paying the line of credit back towards the life insurance company, and as you pay that balance down, that frees up more money that you have access over here. That's the difference, right? So it's just like a home equity line of credit, but yes, it's like the home pays you interest while you're also paying interest back to the bank. So just be aware of that little myth there. That's why I also don't buy houses. I'd rather get a 30-year mortgage with the bank than try to use my own hard-earned cash when I can use that money and invest it and make a lot more money somewhere else. Now, if you're somebody that's like a Dave Ramsey fan, you want to do all things in cash, that makes sense, right? I get it. You want to do that. That could make sense for you. But remember, even then, if you don't like debt, you still technically have these loans with the insurance company. So you're still getting loans. Even if it's collateralized, you're still getting loans. You're still paying interest. So be aware of that. So like I said, it's not about just having infinite banking. It's about designing it the right way. And I know there's a lot of people who are going to argue with me, and there's even influencers that also talk about infinite banking saying, well, he claims he does it the right way. Yeah, the reason I know that is because whenever our clients keep sending us stuff that you guys send as crap to them, we send them something that's way better. And what does way better mean? It means you have more cash. You have more freedom. Less costs mean you have more cash in the policy. Not all infinite banking are created equal. Do not for 1 second think, even if they're popular in the infinite banking space, don't think that they're doing it for your best interest. Because I've seen so many times where you might be paying double the fees for no reason at all. They'll tell you, oh, this is the best design. No, it's not. The best design is giving you more cash back in your pocket. That's the best design. Wouldn't you agree with that? And so, yeah, you and I both know that having more money for you is the best thing. And so the best designs do that. I'll give you an example. I had one client where he was a dentist. He said, Chris, I've bought these policies from this infinite banker. I've got 4 of them now between my wife and I. Can you look at them? Can you make sure that they're still okay? I said, you know, you've had them for like 6 or 7 years. They're probably fine by this point because you've paid your dues. You paid those upfront charges. Now it's less fees coming out. If you did a new one with me, there'd be new fees. Well, I looked at it and I said, all right, let me do an apples-to-apples comparison. Guess what, guys? Apples to apples, paying the same amount. They're paying about $150,000 between the two of them in these different policies per year. After 20 years, there'd be $2.25 million more in our policy versus the other one that they already paid the extra fees into. $2.25 million more. And just in case somebody wants to debate it, well, that's because you cut down the death benefit. Yeah, we did, but they still had $4 million more death benefit down the road in 20 years as well. Needless to say, They said, all right, we want out of these policies. We want new ones that are actually doing the right thing. They have to be efficient. So how do you know you have the best policy? The best way to do it is to shop around. Look at different options, right? I welcome people to shop us because they'll find out, they'll come right back to us saying, yep, you're right. Those are the best, right? Now, there might be somebody that'll try to use little sales tactics on you to say, oh no, paying more is good for you because this is why. But longer term is good. Or they'll try to show you confusing numbers so it looks like it's better, but you actually had to pay more money in to beat our policy. Or you had to get taxed on that money because you had to break it and get all this taxes on it, but they failed to tell you that, oh, this became taxable for me to be able to beat those other numbers. You got to be careful, right? That's the truth is you want a good, honest opinion when somebody does that. You want a good apples opinion and make sure that it's actually apples to apples. And I'm just here to tell you, I mean, that's the whole reason we've even started doing it ourselves, because I couldn't even find among my own friends someone who consistently would do the best for the client every time. So I actually stopped referring to them. We started doing it in-house for that reason. So yeah, if you ever want to use it, feel free to go to moneyripples.com, click on the Infinite Banking tab. You can actually meet with somebody to see what those numbers look like in your situation. But even if you don't use us, right? Regardless, be sure that you're actually shopping around, looking for the best thing. And I'll tell you, the best way to prove that it works is to see how it does actually get utilized. I have another client, he's like 60 years old. He's been using it because he loves to use it with investing. Because if you have more cash to use, that means he can go and invest it faster. And what is he doing? He's going and using that money to invest. And yeah, he's borrowing from the cash, right? He's paying them interest. But because he's taken the returns, like the cash flow coming from that investment, paying down that loan balance, he gets charged less and less in interest while they're compounding more and more. So not only is he making money from that investment, but he's also making money in compounding interest that he's earning above and beyond what it costs for the loan. He's making money in two places at the same time. Guys, I even have other clients that are even using it to go and buy policies on their kids and then using that to invest too, because they're like, hey, kids are cheap. They have cheap insurance. Great, leverage them, use it. There's so many different ways to use this kind of thing. And again, it can be used to work well. But the reason, if you want to really prove that this actually works, the best thing to do is look at it for yourself. So again, I invite you, go to moneyripples.com, click on Infinite Banking tab there, and let's see if it actually works in your situation. And if not, we'll tell you, because there's no reason to BS you and waste all of our time and effort for something that's not going to be in your best interest. So go and be sure to go to moneyripples.com today.